Question is, what signals does he look for when he's considering shorting a company? He's right here with us exclusively this morning. Carson, welcome to the programme. Well, that's the question, isn't it? First of all, how do these companies flag up to you?
Well, they come to us in a variety of ways. I mean, sometimes we're looking at company A and company B comes on our radar screen. So Noble is a good example of that because we first
I think Iceberg went for that first, it did not.
They did, but Noble had been on our radar since 2012 when we looked at Olam. And so there were people who said to us after we wrote on Olam, hey, the company you guys really should have focused on is Noble, which, given that Temasek is the large shareholder and Olam is actually an astute observation. But so Olam led us to Noble. But in other cases, it's just we'll be running screens, and other times it's just exchanging ideas with investors. We'll hear something that's interesting and take a look at it, and yeah, it looks like there might be something for us to do. So a variety of ways.
Okay, so when you then look at the balance sheet, I'm assuming that's the first port of call. Mm-hmm. What is probably the biggest thing for you which will actually set off the alarm bells?
Well, okay, if we see assets blowing out, then that says to us there's something here. Because usually if a company is committing fraud or they're financially engineering their income statement, usually you'll see that on the asset side. So inventories would blow out, PP&E would blow out, they'll make acquisitions. In China, you have this special case, though, where companies can actually fake cash balances. And so that's something
How do you get around that, then?
Well, that's when we have to look deeper and see and try to figure out whether the company is likely, whether the income statement numbers that it reports are likely fraudulent or not. And if they are, and the balance sheet otherwise looks clean, then we'll say, okay, we see the cash is blown out, but a lot of times when we see these wealth management deposits, or term deposits, we're very skeptical of those because we know those can be easily forged. And a lot of times companies can take on debt that they do not disclose to their auditors that they can use to put into their cash account. So we have to spend a lot of time figuring out whether we think that's the case with a company that has a relatively clean-looking balance sheet otherwise.
I think Heidi's got a question with regard to this as well, haven't you, Heidi?
Yeah, Carson, hopefully you can answer this, but I'm just wondering how many of your recommendations come from some of these larger, prestige long-short funds that can't publicly articulate these views themselves. Is that where some of it comes from? I mean, I know that was sort of the case when it comes to calls on companies like Sino-Forest.
I mean, certainly some of the things that we ultimately bring to market are ideas that we've heard from other investors. At times, but it's not a one-way conversation in those instances where we get spoken at and we never provide ideas in return. A lot of times we'll say, we'll have conversations with people who trade in that information and say, now, what do you think of XYZ? That's something that looks interesting to us. What percentage? It's hard to say. I mean, we are very, very, very critical. I'd say we're hypercritical of short theses. So a lot of times when long-short investors bounce an idea off of us, a lot of times we'll get back to them and say, look, we don't think this is that great an idea because of ABC reasons. So we have a very high, bar that that has to be cleared in order for us to go publicly short on something.
Okay, but it's suffice to say that, there are these conversations, the back and forth, and then perhaps, some of those times you would take that tip, if you will, and then do your own research and make your own call on that? Sure.
Like any other investor in the markets or professional investor in the markets, I mean, we talk to investors and we exchange ideas. And some of those ideas are things that we'll act on, but a number of the ideas that we act on are ideas that we internally generate. But I mean, we're no different than any other hedge fund in that respect, in that we're constantly talking with other investors.
Sure. I want to talk about your calls on some of these Chinese companies because, we see intermittently these sort of implosions. Huishan Dairy was one of the most spectacular ones this year. You have these, disappearing members of the board and all sorts of things happening on. There's discrepancies when it comes to their cash flow. I mean, is the Hong Kong market a bit special in the severity and, I guess, frequency of some of these, governance issues that we see cropping up?
The short answer is yes. There are a number of companies listed in Hong Kong that we think are committing fraud, often combined with stock manipulations. And the manipulation is really a function of so many of these companies having such small public floats. And what is often really the case is that even if nominally the float is, say, 25%, probably the chairman, through proxies, controls another 10 to 15% of the float. So there's a lot of market cap notionally for short sellers to short, but the problem is when it's a manipulated stock, it can be pretty hard to wait for that stock to break.
Okay, it's not, of course, just Hong Kong. We're talking a little bit more about China on the other side of the block, but I want to just Snap on Snapchat. Okay, you are actually quite, how can I say, down on this, as it were. Why? I mean, you're saying it could be a short in the future.
Yeah, it's a company that we've been looking at, and I mean, what we think is, there are a couple of points that we think the long side not really giving enough credence to. Number one, there's a former employee who's filed a whistleblower suit alleging that Snap had by pretty decent margin overstated user metrics in the past before it was public. And I think a lot of the longs are dismissing that person as a disgruntled former employee. Well, we did a decent amount of diligence on him, and based on the feedback that we got from our investigators, I think he's a pretty stand-up person who has a lot of credibility. So these allegations that Snap had overstated its user metrics, they should be taken very seriously. And then a lot of times people will be kind of apologists or dismiss that behavior and say, well, it's a new day, it's public now. But the thing is, you're looking at, if these allegations are true, you're looking at a management team that has been massively rewarded for doing the wrong thing. And those zebras very seldom change their stripes. So that's one reason why we think investors should look at this one, look at Snap very closely. Another reason has to do with the strategy. A lot of the bulls on Snap say, well, the young generation, they don't like Facebook, they want to use Snap, and this is a generational shift. And the response to that is that this is just behavior of teenagers, but as they become, where they want to really stick to their cliques and keep things hidden from their parents, but as they get older and they join the workforce, then they go to Facebook and they look to engage with the wider world. So there's a real question as to how valuable Snap can be based on its strategy.
Carson, you're saying that China is going to face or have its day of reckoning, but that's what people said beforehand, before the subprime crisis. People were predicting it for years, but it will happen at some stage, won't it? It's redundant to say so, isn't it?
Well, I guess what's maybe somewhat new is, first of all, I've been saying this for a long time, and I have not been right yet, so I certainly fall into that category. But I guess when I used to say it, there was this debate between, there were a lot of people who thought, no, China, they're doing a great job, there's going to be no hard landing. I mean, now it's more conventional wisdom to assume that all of this one day really sours for the country and for the economy, all of this debt. And so there has been a shift. But I'll tell you, it will be a significant day of reckoning, but I have no idea when it's going to happen.
Where would it come from? Is it debt which worries you? And do bond markets and debt issuance in Asia worry you at all?
Yeah, so look, China is a massive asset bubble, but also credit bubble. And I mean, whether the bond market triggers, I don't think it's going to be so much bond market. If I had to pick where this starts, and this is maybe a little bit better than throwing a dart, I would say shadow banking, wealth management products. And the thing there is, I mean, China is kind of faced with a damned if it does, damned if it doesn't problem there, because in a number of cases, wealth management products, and they've found ways to make the investors whole. But if you do that, if these have this implicit state guarantee, well, then you're going to disintermediate the banks, and the banks need those deposits. So it's a pretty difficult situation that has been created there in the mainland.
Yeah, well, the problem is that, in this most recent clampdown on leverage, it's actually driven more into shadow financing. So it feels like whack-a-mole. But I mean, that's not an investable call, though, Carson, if I can put it like that, to say that anytime between the next, 2 months and next 25 years, we're going to see this day of reckoning for China. What would you say to investors that are looking for a way to either protect themselves or make an opportunity out of that?
Well, protect themselves, I think they have to really, it's one thing as to whether you want to be, long China in a big way when there are these problems that are pretty close to the surface. It's another question of whether you can set up a trade to actually profit from it. The first question is easier to answer. I mean, I would argue, and look, being a short seller and somebody who's much quicker to see what can go wrong with something than most people are able to, I would say, yeah, you need to be very conservative, with China, and always recognize you have to be nimble enough to get out of these trades if something goes wrong. Now, whether you should set your book up to try to profit from it, yeah, that's really hard. I mean, I've liked in the past Hong Kong dollar short, and there's that, and I've also at times we've liked doing a put straddle on the RMB, or the offshore RMB. So there are some sophisticated ways that people can play this if they want to be directional, but it's hard.
The issue, though, Carson, is, you may have this kind of systemic risk being built up, and it may come 10, 20 years, 5 years down the track. But in the meantime, don't fight the PBOC, don't fight Beijing, right? We know that the full force of policy comes into play whenever there's any sign of instability.
Yeah, and to be clear, I mean, we are not a macro shop. I certainly have strong macro views, particularly on China, and particularly when I see asset bubbles. But, I mean, we play things on an individual basis. We look for companies that we think are about to fail.
Right, exactly. So that brings me, which is the next one you're going to highlight?
Well, we'll have to find out tomorrow. But it will be Hong Kong listed.
It is Hong Kong listed?
It is Hong Kong listed, yes.